Welcome, this is Sławek. I wanted to do an overview of the current state of the market of existing Bitcoin ETFs. And in fact, yes, there are ETFs that are actually functioning right now in the market, except they are localized and isolated to certain geographic areas. What is an ETF? I wanted to start off with a very basic definition. ETF stands for Exchange Traded Fund and describes a kind of investment fund where the price of assets like gold, stocks, and oil can be tracked. These assets can then be traded on exchanges just like conventional stocks. What this means is that investors have the option of buying and selling their holdings in these exchange traded funds to other investors via the stock exchange. First off, let's define the major advantages of a potential Bitcoin ETF. Most importantly, it will remove a technical difficulty in owning Bitcoin. For instance, setting up a wallet, obtaining a security for your private keys that hold your Bitcoin, even the registration on crypto exchanges, which can be burdensome with all the paperwork and ID verification that is required. Next, and most important, provides an opportunity to invest from various retail and institutional traditional accounts. The final major advantage is the fact that ETFs will actually purchase the physical keys to Bitcoin. They will hold it, unlike Bitcoin futures, which are just a derivative of Bitcoin. And as we all recall, back in the summer of 2017, when Bitcoin futures were announced, the price of Bitcoin was just over $2,000. At the end of the year, Bitcoin peaked at 20,000. In other words, it did a 10x. Now when we look at ETFs, the fact that they will actually hold and purchase Bitcoin, the potential is significant. Now we'll do a brief overview of all existing ETFs and potential trials for obtaining ETFs and where we are today. First, we have the Bitcoin Tracker 1 ETN. ETN is an exchange traded note. It launched way back on May 18, 2015 on a fully regulated Nasdaq Stockholm exchange. However, obviously it is localized and isolated to Sweden. Next, we have the Winklevoss Trust ETF. Winklevoss twins are owners of Coinbase, one of the largest American crypto exchanges. However, they were rejected back in March 2017 by the SEC. Since then, the Winklevoss have filed a total of 7 patents. The patent awarded on June 19th details a method for providing an exchange-traded product holding digital math-based assets, as well as the issuance of shares tied to an ETP. In other words, we're attempting a modified version of an ETF. VanEck SolidX Bitcoin Shares ETF. VanEck is a New York-based investment management firm that oversees $45 billion in assets, blockchain and fintech company as part of a strategic move to launch a Bitcoin ETF. In July 2018, they attempted for a 3rd time to get approval for their ETF with the SEC, and that is currently ongoing. If we recall, a few days ago, the news broke that in fact that is the case, and it already resulted in a $300 bump in the price of Bitcoin just on this news alone. If approved, it'll be available early 2019. Its target market is in fact to attract institutional investors. In other words, if you want to participate, you have to buy an ETF share, and one share goes for $200,000 approximately. More precisely, 25 Bitcoins make up one ETF share. Next, CBOE Global Markets ETF license. CBOE is a New York-based investment management firm. They partnered with SolidX blockchain and fintech company as part of a strategic move to launch a Bitcoin-backed ETF. Decision date rumored to be August 10th. Likely, I believe it'll be pushed back since they filed at the beginning of July. However, you need 45 days before an approval can be issued, and the math just doesn't add up. Expect a delay. Next, and most important in terms of the pump that we're recently seeing in the price of Bitcoin reaching $7,400, and that is due to the fact that BlackRock is rumored to potentially enter the space and create an ETF. First off, BlackRock is the world's biggest asset manager. They have $6.3 trillion in assets under management. BTC price jumped just on the rumor alone. In fact, what they have done up until now, and their CEO clarified it, is that they're just setting up a working group to look into ways to take advantage of cryptocurrencies and blockchain technologies. Here is a chart that I wanted to show and make a comparison to gold ETFs. Back in 2003, gold launched its first ETF. At that time, gold was going for $332. Gold peaked at an all-time high nearly under $2,000. Currently, gold sits at around $1,250. And most importantly, this chart shows that since the launch of ETF, gold exchange traded products have gone from $0 to a total of $146.6 billion at the end of 2012. Here is a closer look at the gold chart and its price using the monthly. And as we see, back in 2002, gold was just over $300, and since then it went on an 8 to 9 year bull run and peaked at just under $2,000. Even though it has climbed down, we can clearly see that ETFs have had a positive impact on the price of gold. And in my opinion, see you later.